2024 is upon us. Now is the time to make decisions for 2023's crop and protect this spring's investment. Let Advanced Trading help you create a marketing strategy to protect your investment and reduce market risk. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits, regardless of market volatility. Our team is ready to help you tackle 2024's uncertainties. You never stop working, and neither do we.
Good afternoon. My name is Drew Moore. I've got Brian Basting and Michael Reginelli in the studio with us here this afternoon. It is Friday, January 12th, and we are going to digest the USDA report. Generally, this is one of the largest reports and most volatile throughout the year that we see. If you were with our friends at ATI Pro Media at 11 a.m. Central Time this morning, you got to see their gut reaction. On the day, March corn closing down about 9 cents, March beans down 10 cents. March Chicago wheat down 7 cents, and KC wheat actually popped up and closed up 2 cents. So a little something for everybody. Certainly, corn, soybeans, and wheat well off their lows, intraday lows. But I'll let Brian and Michael kind of get into it today. And the format's going to be a little bit different. We're just going to have more of a general conversation rather than asking Q&A. But first, I'll talk to Brian. Brian, what happened on the wheat ledger here with the USDA today?
USDA really was aggressive with the exports from the Black Sea, Drew. Increased the exports from Ukraine by 1.5 million tons, another million tons from Russia compared to December. So that's 2.5 million more tons exports from the Black Sea compared to December.
That's a big
so
deal.
Just a fierce export market. We did have a nice push of Chinese business, of course, back in late November, early December, but it's kind of dried up since then, Drew, and we're not seeing that push that we saw in the market since then, and for good reason. The export market around the world is very tense right now. So I think the big thing we take away on old crop right now, Drew, is that we've got a market that's midpoint of the crop year here. We're into the second half of the crop year, and we've got our supply set, and now even in the southern hemisphere, a larger than expected crop in Australia despite the El Nino, and we've got a little bit of a larger expected crop in Argentina.
Sure. Tough
Tough export market the next 5 months. I would say on new crop, Drew, the market got a bit of a surprise today. The seedings were a little lower than expected. For example, hard red winter was 24 million acres. The average trade guess was 25.2. Soft red was 6.86 million acres, and the average trade guess was 7. So just a bit lower. Compared to last year, that's about 13% lower on soft red winter compared to last year. Big drop compared to last year in Michigan, also in Ohio.
Yeah, and Ontario, I mean, isn't factored into these numbers, but I think they would give you, a similar story to what Michigan's telling you too. So I think some of the people in that world maybe expected this to some degree, but still certainly lower than the average trade guess.
No, Michael made a good point. Ontario, we got to include Ontario too. That's a substantial amount of wheat up there, and that did not get planted. Late soybean harvest last fall, Michael. Yeah. So it's just a challenge getting those beans out last fall, Drew. So what we're going to be watching now is the weather on new crop.
Absolutely.
Now the difference between the last year and this year is that we've got good moisture out west, particularly in Kansas compared to a year ago. So,
Brian, real quick on wheat, were you surprised? I was a little surprised. So that the world stocks number was 2 million metric tons higher than the average trade guess, despite the fact that they're pumping global export demand and competition there too. So you would think you'd get a drawdown on some of the competitive stocks, but we still, the trade objectively missed it from the world stocks perspective.
yeah, we're not anything as burdensome worldwide, Michael, as we were a couple years ago.
Right.
But like you said, a bit of a surprise there. I think we got to isolate our focus on our competitors now when we look forward. And that competition from the Black Sea, Michael, and the fact that we did not see the devastating crop in Australia that people were talking about earlier last fall. 25 million tons is way below 40 last year, but there have been years where Australia has been 10, 12 million tons for the entire crop in an El Nino year, but this year 25. So I think we've got enough stocks to get us through the old crop year on wheat. The big question now will be the northern hemisphere weather over the next 6 months. How are we going to do between now and harvest in July?
Sure.
Yep.
There's sporadic snow coverage east to west across the Midwest. I mean, it sounds like there's some rumblings of winter kill. Is that something on your radar, Brian?
Every year, Drew, you got to be sensitive to that
Sure.
every year, because wheat, while a very resilient crop, if you get 10, 20 below zero, any crop is going to struggle without that protective snow cover. So
Absolutely.
I think the best snow cover at the moment, Drew, is out west in Kansas, Nebraska. Got good snow cover.
Yep.
We did see some snow cover in Michigan this week. Wisconsin, I'd include in that. Far northern Illinois, a little bit more spotty, and I'd defer to Michael there, but maybe in the eastern belt in Indiana and Ohio.
Yeah, I think around the lakes they maybe got a little bit of snow. Probably not as much as advertised. It's somewhat sporadic. You know, we were estimated even here in Bloomington to get several inches. You know, and you could still see grass the next day. So
Right.
you know, it felt like more precip. We were kind of right on that freeze line. You know, and even today it's pouring rain here. But there is, as we cool off into the weekend, there's obviously precip coming behind this. So I think a lot of those states, at least right now the projections are should see a decent amount of snow this weekend.
It's good. It's good. They need it. On to soybeans, Michael. What stood out on the balance sheet? Got a few historical things to talk about, right?
Yeah, I mean it's record yields in Indiana and Ohio. Brian and I were talking about that earlier. So big yields in the eastern belt. Not a nationally record yield.
Right.
We did have a national record yield on corn. We can talk about that here in a minute, but certainly better than a year ago. Down from 51.7, which would have been 2 years ago, but 50.6 it's a decent pop. Not quite 1 bushel an acre over last year, but close to it. And I think that's it's pretty solid. I mean, the market really wasn't looking for any change coming into this.
Right.
So I think that's part of the surprise here. If you look at ending stocks as well, there were a number of changes to the balance sheet. They actually took harvested acres down 400,000. So that yield increase was offset to some degree. It wasn't fully felt on the production side of the ledger,
right,
because harvested acres actually did dip off a little bit. Outside of that, they took 3 million bushels off the residual number and the demand side, and that was it. And that's kind of that fudge category that if they feel like they need to tweak a number, they'll use it.
Right.
Not probably a lot of merit or reasoning behind it, but 35 million bushel increase over last year on the carryout side to 280 from 245 last month. It's still sub 300 million bushel carryout if this holds for, I believe, the 5th year in a row.
Right.
And if you go back beyond that, we had several years that were close to 2x, 3x, this type of number. So
right,
it's different than corn when you look at the past couple of years. Corn's in a very different environment than we've come out of the past 3 years.
Absolutely.
Beans, it's still relatively tight despite the fact that at a 280, if we pretend that holds into the end of next August, it's still going to be sub 300. It'll be higher than we've seen the past couple of years, though.
Sure.
So a little more comfortable. It was interesting that we saw a futures bounce as the day went on, though.
20 cents off the lows.
Yeah, I mean, when we were down 30 cents, if you look at like that mid-November high, that would have just eclipsed $2 off that mid-November high when we got to the bottom today.
Right.
And then we rallied, we rebounded 20 cents into the close. So that's a little encouraging ahead of a long holiday weekend, probably some weather considerations, logistics, a lot that goes into that.
Right.
But
still a lot of unknowns on the Brazilian crop as well.
Yeah.
So throw that into the mix.
100%.
Yeah.
And a big global number too.
I think Michael did a terrific job highlighting that point, Drew, is that even though the bean carryout is higher than last month, we've still got a lot of weather in front of us for South America.
Absolutely.
Now they are harvesting in northern Brazil. However, as you move south in Brazil, central and southern Brazil, those yields are still being determined, and especially in Argentina. Just finishing planting in Argentina. In fact, they're still planting the tail end of the double crop beans, Drew, after the wheat harvest in Argentina. So we've got to really look at a weather market potentially in Argentina all the way into the 1st of April or so. Having said that, USDA today did increase that Argentina crop 2 million tons.
Yeah.
And I'd remind the viewers that last year Argentina raised a 25 million crop. This year they're projected to raise 50.
50,
Right.
yeah, it's
Yeah,
double.
Double the crop. Sure. That certainly offsets a lot of production issues that may be possible down or up in Brazil.
Yeah, it could be a soybean meal story to some degree too. I mean, they're the largest exporter of meal in the world.
Right.
USDA kind of kicked the can down the road. They didn't touch the soybean meal balance sheet. I don't think they changed a single thing from last month. They kept the carryout unchanged on soybean oil as well. They got there a different way because they made a ton of tweaks to the soybean oil balance sheet.
Sure.
You know, higher bioenergy usage, lower food usage. Either way, they still netted it out at basically unchanged from last month. So the product side really didn't see any, you know, from a carryout standpoint, material changes.
Understood.
And meal or oil.
Good, good. And over to, last but certainly not least, corn. What big record yield here on the report? Unexpected, right? But you know, it's something we haven't seen quite some time, and certainly from a balance sheet perspective, carry out over 2 billion bushels. First time in 4 or 5 years that we've seen that. So certainly some implications for price. But any other items that you guys want to note on the corn balance sheet from the USDA?
What a fascinating story, for lack of a better term, Drew. Go back to July 1st and look at some of the crop condition ratings across the U.S. Corn Belt.
Right.
Here in Illinois, some of our crop was really struggling with dryness right around that last week in June. And even some of the crops west, and I know that the crops east maybe weren't struggling quite as bad here. I'll let Michael address that in a second. But to see that yield jump from the December number of 174.9 to 177.3, it does speak to the stout eastern yields that we saw. And I don't think all those eastern crops, I'll defer to Michael, but they weren't harvested at the end of October or November, and now the USDA is playing catch up with those.
Right.
So.
Right.
Yeah, very late harvest in the east, so probably some of that back data flowing in. It's been pretty well advertised or pretty well known to most in the market that the eastern belt was going to have a large corn crop, and that's absolutely what's occurred here. I don't think anybody saw the national jump in yield like this. I mean, the high guess today was 176.5, so to come in above 177, which is a level that we've never achieved before. You know, we've been in the mid 176s 3 different times in history, never eclipsed 177 until today. So it's still, all that aside, it's still a bit stunning just how big this crop is, you know. Now, they did adjust some demand categories too, might be trying to keep the carryout in check to some degree. They didn't touch exports. There's a contingency out there that corn exports maybe need to come down a little bit as the year goes on. Some on the other side of that would argue that that's a little presumptive because it's early in the year. You know, we got 8 months to bear that out, and if prices get cheap enough, we maybe price U.S. corn into the global markets. We maybe start developing some export demand. There's always a potential for that. So the USDA is probably taking a conservative stair-step approach there, and they're probably trying to prevent additional balance sheet destruction. You know, they did increase most other categories, you know, on the demand side of the ledger, you know, which is basically working against that yield increase, which is bringing production up.
Right.
So you take demand up, that's just going to reduce that hit to the carryout. But either way, it's a pretty sizable carryout. It's similar, I believe, to the 18-19 crop year. It's dramatically different than what we've seen the past 3 years as well. So, and the global corn stocks are huge. You know?
That's got to be the key message from a risk management standpoint, Drew, what Michael just said there a moment ago. Each of the last 3 years, the stocks-to-use ratio for the U.S. corn balance sheet was under 10%. It's projected to be just below 15% now at the moment.
Right.
And now we've got a carry built into the corn market already. We're already seeing now the deferred contracts melt down, if you will. December went off board about 456, 457. March has now pierced that. It went down to like 442 today.
Absolutely.
That's the warning sign.
It's the structure of the market.
It's the structure of the market. That's well said, is that in a carry market, when you have ample supply, historically, every year is different, but historically, exactly, that deferred contract, because the value of corn is worth it, the value of corn. It's when December expired at 456, that's what the value of corn was. But March at that time was probably, Michael, what do you say, 20, 25 cents above the December?
Yep, that's fair.
And now that carry, now the March to May carry, I don't know what it is today, Michael, but it's
12 cents, I think.
But that by the time the March expires here, if nothing changes, one could argue, Drew, that we're going to see the May potentially melt down to where the March expires. The way you can defend your balance sheet against that is to sell what carry is in the market today and attach a flexible call option to that. One risk management strategy, but get control of those bushels. Get control of those bushels, put a floor underneath it at some point. We don't know when the low is going to be, But once you get control of those bushels with a floor and leave the upside open, and there are different strategies you can do that, then you'll rest a lot easier.
Absolutely. It'll help for a little sleep at night.
You should also start looking at next year as well.
Absolutely.
You know, that would be another thing. The carry out that we're talking about, if anybody's not familiar with that term, it's basically what we're carrying out of this marketing year, which is going to end, you know, at the end of August. New marketing year starts September 1st. It's just the bigger that number goes, the more corn we're carrying into the next marketing year. It's a buffer, right? So bigger numbers, you know, we have more supply on hand. And if you look at we didn't get into it too deep today, the March quarterly stocks report, the Jan report just gets a ton of data because it's a blend of, you know, you get wheat acres, you get the quarterlies, you get the monthly WASDEs. You know, it won't be until March until we get the planting intentions. But by all means, you know, I think we in here and most in the trade are expecting corn acres to be higher year on year for next year. Now, again, you do enough damage to prices, things can change. People might make hard decisions, but some people are already locked in. They've already made commitments up to this point. So it's going to be really interesting to see how the acreage scenario plays out. But if you're planting corn this upcoming year, knowing that we're bringing more in, and we just watched a year without perfect growing conditions eclipse the biggest yield that we've ever seen, you should be looking at DEES 24 as well and trying to kind of begin to hone in on what is my actual exposure.
What's my break even? Yeah.
What's my break even?
Defend my balance sheet.
That's right.
Brian likes to say.
Yeah. Michael made a real good point there a moment ago, Drew. We got to respect these genetics that we're seeing.
It's unbelievable.
It's just off the charts. Michael just used the word that I was going to use, unbelievable, to say that we're going to see a 177.3 corn yield.
Yeah.
Now, conditions later in the growing season last year got better, but it certainly didn't feel like that. And needless to say, as Michael said earlier, the market wasn't expecting anything close to that.
No.
But every year is different, but those genetics in 23 will be remembered for a long time.
Absolutely, absolutely. Well, thank you guys very much for your time today. We'll wrap it up here, but if you have any questions, please feel free to reach out to myself, Brian, or Michael. And also, if you're looking for some good day-to-day commentary, ATI Pro Media is online at 9 a.m. Central Time. They usually go for right at 9 minutes. At 9, and if you have any questions or comments for those guys, please feel free to reach out to them as well. Thank you for your time today, and have a great day.